AI investors. So today, since people seem to like my view of the Python, going over portfolio optimization algorithms, thought I would just give an update a bit to my last video that I did. So there are different optimization techniques that you could use in Python in Skfolio. And one of them is this HRP technique. So the HRP technique is a hierarchical risk parity technique, which is a clustering technique actually. So this is a different technique. It's usually referred to as a non-convex technique to find the best portfolio. I've also added to my file an update of the best subset of the portfolio. So I have the main portfolio right here, just of a few tickers that we chose randomly. Okay, and then basically what I said I wanted to find the best subset of and optimize the weights of the subset of the portfolio so that we kind of can realize what are the best what's the best case scenario for our portfolio. So that what is the completely optimized version of our portfolio, including in a subset of our portfolio. So if you had 100 assets, you could choose the best 10 performing subset assets and then optimize that. That is really like the best case scenario given a certain portfolio of let's say asset classes that you have. You can find the best subset and best performance. So with that, the top five performers were NVIDIA, Tesla, Apple, Microsoft, and Google. And we just used a mean risk optimized to do this one, but I will overlay the HRP technique to show you what are the returns of each technique over the end. So we ran this code, okay? So we run this code, and out we get is this graph right here for the cumulative returns for the different types of analysis, algorithms, techniques that we've used. Let's just go over this real quick. So I've updated the code to include until today, whatever, yesterday, maybe today, yesterday. Updated that code. We see the big drawdown in April across all the techniques because we had this tariff scare and then a big rally. Looks like a inverse head and shoulders with a breakout. Wouldn't surprise me if we retest that. Anyway, that's my TA talking right there. If we look at each portfolio here, we see we have the blue. In the blue, we have the optimized portfolio. So that is the full portfolio using mean risk in Skfolio. So that's the optimized. You see the HRP or hierarchical risk parity is significantly lower, and we can ask the reasons why that might be for the clustering techniques that HRP is using, maybe targeting different assets, and we see certainly there's a lower variance in HRP than any of the other models. We see the orange line, which is equal weighted portfolio, which is significantly underperforming the other purple and the blue line. But it still outperforms HRP. That's curious. So, because even if you just have an equal weighted portfolio, you're outperforming HRP in this scenario. And the blue, the purple with the dash, that's optimized subset portfolio. Top 5 performing assets of our portfolio that's optimized using mean risk in Skfolio. So we see that is the best performing, although it is the most volatile. If we look at the variance of this purple one, it's going to be pretty high. So here it says annualized volatility is 0.48, that's high. So it's a very volatile portfolio, although it's the top performer. So this kind of just also gives us a broad view of the risk reward scenario that we're in here, with that you have a higher risk and you have a greater reward. Of course, reward is relative as to the time frame you're looking at. You also have a higher drawdown on periods of volatility, but you see that even with the drawdowns, you're still outperforming the equal weighted portfolio or the HRP portfolio. So, quick update. I just wanted to show you guys what is possible here. I'll continue to investigate these different algorithms and packages using, that are useful for finance and Python and optimization, says to give our crowd, our quantum AI investing crowd, a little bit more insight into modern day scientific computing and how one could optimize a portfolio um, over a given time period. Of course, we would love to know what the future has, and that's where the hardest thing. That's the hardest thing to do is to predict the future, but or try to at least. It's extremely difficult, but we have a good idea here of what the top performing assets could be. And as long as you're willing and able to hold on to those assets through volatility, it looks like you'll come out a winner in the long run, holding those top assets. All right, that's all I wanted to say for tonight. So as always, let the markets be with you. Take care. Good night.